Finally, Stats Canada realized the way they calculate CPI is not reflecting the true inflation. So they're now reevaluating it, and we're going to talk about in this video. Plus, we're going to cover the market is slowing down, it's losing its stream, but are the prices going down as well? So before further ado, let's dive in. What is up, Canada? Words of YouTube. Thanks for joining in. As you know, the purpose of this channel is to educate my audience about the real estate market in Canada, with particular focus in Toronto, GTA, as well as some of the macroeconomic factors that has an impact on the market. In this video, we're going to cover the market is slowing down, the market is losing its steam, are the prices going down as well? We are going to talk about that. So when you see in the news these headlines that the market is slowing down, it's we have less number of buyers available in the market. I think it's kind of misleading a little bit because you need to understand the full picture of it. So first of all, they're comparing the current number of transactions with what we saw in the month of March. So March was the peak of the real estate market, particularly in GTA area, but also it was the same situation in Canada as well. But March was the peak, and we have seen a record number of transactions happen, leading from January all the way up to the March when we hit the record number of transactions. And since then, April, May, June, the number of transactions are kind of decreasing, month over month, which is kind of expected. You cannot expect, every month the prices and the transactions are going to go up, consistently without any pause. Every commodity or any asset price, it fluctuates, like this. It doesn't just vertically go up. So this is, not a surprising move. But what is misleading is in those headlines that the prices are not going down. What we are seeing right now is, of course, there are less number of transactions happening today as compared to what we saw in the March, but the market is still very much competitive. It is still very much service market. When the house is listed on MLS, it takes a matter of days before it is sold. And still we are seeing the house prices sold over asking. Now, over asking thing is kind of misleading as well, because that's the strategy that realtors play, right? They tend to, list the house below the market price so that we can create a lot of momentum, a lot of bidding and offers, and of course, it will be sold over asking. That's how they they make it like a news that house is sold over asking, but it's really sold on the market price. And there's a reason behind this, why the market is going down. The market is going down because the people are coming out of lockdown, right? They have been stuck in their homes for the last 18 months. Now, finally, we are relaxing the restrictions. Summer is here, so people would like to go out, travel, meet their friends and families, and perhaps, going across the border to, enjoy the summer and do anything, whatever they would like to do. That's why the housing has taken a backseat in their priority list. So unlike last year where people were stuck in their homes and they had nothing to do, so they were spending money on renovating their homes or buying and selling properties, that has taken a backseat for now. Now, having said that, the prices that we saw in the month of March, it is established like a benchmark. So we're not seeing that anybody's selling property below what we saw in the month of March and April. Like you're not seeing right now that a 4-bedroom detached house in Milton is sold for like $1.1 million. That's a pre-pandemic price level. It is still being sold 1.2, 1.3 plus, depending upon the house condition. The other thing I want to cover is Stats Canada is now re-evaluating the way they calculate CPI. So what we have seen, in the past, they have a bucket of like 700 items that they consider, that they assume that the average Canadian is going to spend money in their lifestyle. So they are kind of lowered some of the items like clothing and shoes and perfume and makeup accessories, where people are typically not spending money on that, but they increase the amount of products like shelter, as well as home renovations and cigarettes and cannabis stuff where average Canadians are spending money on. But they're still not considering the house prices in the CPI calculations. So when you see the inflation figures are published at the end of this month, they are considering some of the housing renovation cost, but they're still not considering the house price. So what we have seen, the house price growth in the last 12 months, it is not being reflected in CPI. So I wanted to make sure you understand that, because CPI is a very vital parameter considered by a lot of organizations in Canada. Like Bank of Canada, they look at CPI to understand the inflation, and that's how they fluctuate the interest rate based upon that. Canadian government, they look at CPI to understand how much money they have to give out in terms of benefit to the average Canadians. Plus other organizations, they use CPI to negotiate wages with the employer. So it's a very important parameter. So everybody should understand the way they calculate it, so that if it is not reflecting the true inflation, then we have a right to ask Stats Canada to reevaluate it. Now, the final thing I want to touch upon is the rental market. We have seen in the pandemic that the rental market, especially in condo segment, has been brutal, right, for the last 18 months plus. And still the market is quite buyer's market in terms of renting. But lately what we have seen so far is the amount of rental applications kind of picking up. There is a spike. Recently we have seen the amount of rental applications not only in the downtown core urban area, but also in the suburbs as well, or in the high-rise condo buildings. And I think the reason is people are trying to travel and they are trying to get out of their homes, and Airbnb type short-term rentals are picking up. And especially there is a hope that when the borders are open, then we will see an influx of international students as well as the new immigrants. They will start coming into the country, and guess what? They will need housing, and condos are typically the first choice for those international students and the new immigrants. So we will see there will be a spike of rental application, which will drive the rental price up in the coming months. Perhaps condo market is also going to go up. The market is less likely to crash, and the reason is because the amount of credit that has been created in the last 18 months is historic. We have seen a huge spike of mortgage credit created by the commercial banks in Canada, and where that credit is being spent, acquiring real estate assets, right? As long as that machine is going in terms of creating new credit into the system, the housing market will still remain very competitive, because that is the demand and that is not slowing down. How come the housing market will slow down? So keep this in mind. The banks are keep pumping the money into the market, and that money has to be spent on acquiring real estate assets. So I hope this is helpful. If you like it, give me a thumbs up and hit the subscribe button. Until my next video, take care.